Welcome to Finance Magnates Executive Interviews once more. Thank you for joining us today. We're at the IFX Expo in Dubai, and I am joined by Artur Interview, Head of Systematic Market Making at CMC Markets. Thank you so much.
Thank you for having me.
How is the event going so far?
Good. I've just came because obviously my job is related to being at the desk most of the time. So
And you're taking a break now.
I'm taking a break. So trying to meet up people, socialize, enjoy some free time off the desk.
We're very happy that you're here because we have a lot of questions.
Good. Good. I'm happy to answer them.
We're living very, very volatile times these days.
Incredibly volatile.
Your job must be keeping you awake at night these days.
At night, during the day, yes, definitely.
Just all day long. So I'm sure that your phone will start pinging in a few minutes. So I'm going to have to ask you a few questions about the markets and let's see what your insights are. I'm very excited to see what you have to say.
Always happy to share.
So, I mean, with the days that we're living nowadays, I'm not going to bias you on the answer, but what do you think is currently the product that is being most traded these days? What do you see from your end?
Well, certainly from our perspective, and I think that applies to pretty much everyone in this conference and globally, the huge demand has been in metals. Retail clients, institutional clients are flooding the metal markets, fleeing to so-called safe haven products. Rally in those products, increase in price over the last couple of years, also fueled that because investors are looking for great, huge returns. So they trying to effectively move away their investments from dollar side into more safe haven products as uncertainty about trade tariffs, policy evolves. So people looking for
Are you seeing that trend both from institutional and retail users?
Yes, yeah. We typically see that. I mean, a lot of business we face is B2C. So even though it's institutional client we're facing on our side, it's underlying retail client flow, which is being hedged with us. But generally speaking, we see the same pattern from retail and real money. I mean, if you look at the ETFs inflows, the gold ETFs inflows, they've been huge over the last couple of years, well, specifically the last couple of months.
Now, would you say that gold is an actual safe haven these days? Does it qualify anymore as safe haven?
I don't think so. I mean, what safe haven asset moves 10% on a day? It's difficult based on the volatility we've seen. It's difficult to justify it as safe haven product from an investment perspective. It certainly gave a significant yield over the last couple of years. So I'm sure quite a lot of people made good returns, and it has been great investment product for their portfolios. Now you have to question: is it going to continue?
Do you think it's going to continue?
Are we going to continue same sort of returns as we've seen previously over the last couple of years? Maybe not. Maybe yes. It all depends on what's going to happen with the policy, the central bank rate changes, and most importantly, probably for gold, is geopolitics.
Trump, basically.
Trump, yeah.
Starting a new war and
exactly.
things like that.
I mean, that's
keeping us all busy.
Yeah, exactly. It's either geopolitics, so war, or Fed interest rate decisions. I mean, the huge repricing we've seen on the 30th of January was all linked to expectations changes around the Fed chair, the Kevin Wolf, and the market was just repricing the new potential policy the Fed will adopt once he and if he becomes a chair.
And how do you see the different players trying to manage this volatility, this huge volatility? Are the strategies going more towards hedging or directional trading, or what do you see?
I think certainly in volatile times, we see a lot more hedging activity from our clients. Generally speaking, we've seen exposures on our books change very rapidly. So retail clients, institutional clients trade on a volatility, and you can start day with pretty much flat from books from exposure perspective, and you end up quite long or quite short within a few minutes. So that probably applies to most of our client base as well. So certainly with increased volatility, there's more demand for hedging activity, but there's also opportunistic trading. So people try to buy the lows and that kind of stuff.
And in your case particularly, in your position, how do you handle this insane volatility?
Around specific key economic events and announcements, we prepare our systems, we prepare our pricing. Unexpected volatility, we try to stay on top of things. Main aspect for us is to continue consistent pricing. So to ensuring there's no slippage, but we provide consistent and timely executions. And generally speaking, ensuring that we still remain competitive, but obviously at elevated levels. If you've got higher volatility, the expectations that the spreads the commercials we're going to be charging are going to be slightly higher, reflecting volatility in the underlying market, but we still want to remain competitive.
And I mean, you're mentioning staying competitive, and a few of the strategies or elements that you need to put into place when there is this amount of volatility in your case. Do you think that the relationship with the customers takes precedence over the software-led changes, or is it a balance of both? Or
I think ultimately the best setup is the combination of both, the hybrid model. So I don't think so you can go purely to electronic execution and not necessarily having that relationship touch when it comes to managing the client expectations and relationship and giving additional color, market color to the clients. But electronic execution is the default for the speed and consistency. So we want to be executing trading with our counterparts on a basis of effectively electronic connectivity, and that's a default approach. But then the relationship management provides an additional color to what's going on in the market, liquidity, the discussions around troubles some clients might have had when connecting to our systems or trying to execute certain trades, certain volume. That's very important, I think. At the end of the day, if something goes wrong and you're trading electronically, you want to be able to pick up a phone and call someone on the other side, or being able to even message them on WhatsApp. So you've got that instantaneous response from a human being rather than some sort of chatbot.
Yeah, that it's always important, especially these days with AI. I think the human relationship part is becoming even more essential than it ever was before.
Exactly.
How is AI integrated within this electronic trading? What's the extent of it?
We integrating machine learning models into a lot of aspects of our BAU, what we do on a daily basis. That's from risk management, pricing, and even automating some of the BAU tasks, operational tasks. I don't think so AI and machine learning models will replace human decision making anytime soon, especially at instances of stressed markets. So when you have extreme volatility, stressed markets, in some cases, when you're talking to a client about specific execution, the human touch is very important. So I think AI and ML will enhance what the good trading desks are doing already, but not going to completely replace them. So it's effectively, the way we see it is, it allows us to optimize operational BAU side of tasks, so we can focus on more high value conversations with our clients.
And if we're talking about geographical trends, we're in Dubai. We have to talk about Dubai.
We have to talk about Dubai.
How is the Dubai public different from other regions? What's the advantage of being in Dubai, let's say?
I think from trading perspective, personally for me, I used to be based in London for about 15 years, and 2.5 years ago, I've moved to Dubai. It allows effectively a coverage across various trading sessions. So Dubai is positioned strategically. It's a bridge between Asia, Europe, and UK and US. So I'm coming in the morning. I can spend a few hours with my APAC team in Sydney. I've got pretty much full day with UK guys and Europe. And then I'm catching the early part of US session, and if I end up working really late when I can.
I was gonna say, it sounds like your days are 20 hours.
No, not 20 hours. I mean, there was one day when I worked for 18 hours, but generally speaking, I think Dubai geographically is strategically positioned to bridge that gap between Asia, APAC, and Europe and US. I think.
And what's the toughest trading day you have had in Dubai?
There's been a few, but the one comes to mind straight away is I think 30th of January probably was the toughest. That's when we've seen extreme, so often gold and silver. I think not just me, I think guys in operations, relationship management team probably worked, at least in our Dubai office, worked for about 18 hours. I came in on around 9 a.m. that day and I finished at 2 a.m. So.
My God,
So
I do not envy you at all.
no, I don't
like
envy
my
myself
nights early.
sometimes. I've sometimes questioned why I've chose trading as my career. But
Because of the excitement.
probably.
There you go. The adrenaline rush.
It's got to be that. I've got to be addicted to adrenaline.
Gotta be it, huh?
Yeah, exactly.
Thank you so much, Artur. It was really, really great talking to you. Thank you for all the insights. Thank you so much for watching.
Thank you for having me, Andres.
Absolute pleasure.
Yes.
We'll see you in the next one.
Thank you.